Welcome to the Afterspin, opinions from thought leaders in our state. I want to ask John Hood and Dennis Wicker. For the first 4 months of the state's fiscal year, we learned that collections from personal and corporate income taxes and sales taxes were $34 million less than the same period last year, even though total tax and non-tax revenues are about the same. Is this year's reduction due to the income tax cuts made by the legislature, or are there some other reasons? John?
Well, there are some parts, particularly the corporate tax, that are entirely predictable. But some of this is unanticipated. In fact, the fiscal staff has looked at the same data, and they think that they project for the first third of the fiscal year, we're about $135 million below projections. That's almost 2% low. That's actually fairly par for the course. You're up or down a point or two with these kinds of projections. And when you're in the early part of a fiscal year, it's important not to get too happy or too sad, because your sales tax revenue disproportionately comes in during the Christmas holidays, your income tax revenue disproportionately comes in, your individual income tax in the spring. And so they need to not panic about this, but they need to be watching it very closely. We're still running a cash surplus. We're about $350 million higher in revenue than expenditure so far this fiscal year, so let's not freak out.
Dennis, you think this is caused by the tax cuts?
Oh, I think it could, yes, actually be part of the tax cuts. But I wonder about a couple of things. First of all, you can't judge one quarter, by what's going to happen the rest of the year. Different quarters have different amounts of revenue that come in, and that's pretty clear. So while this quarter may be a little bit low, the next quarter may be higher, and it would even out. So we just have to wait and see what the whole fiscal year brings in.
But wait a minute, they were saying that it was so much less than it was the year before in that same period.
Well, yes.
Corporate tax, yes.
Yes.
Well, and in personal income.
But let me continue this argument. I wonder if some of the folks anticipating tax reform at the national level and tax reform at the state level extended their extended their returns, the file the returns.
Dennis is that is exactly what I was about to say. This is probably, if there is any significant activity here other than just noise, statistical noise, it's probably people gaming federal tax reform. If you're going to take your losses, take them this year. If you're going to make gains, take them in future years. If you assume the federal tax bill will pass, that will have implications for North Carolina tax revenue. And it won't really be about economics. It will be about tax shifting the timing of when you pay a tax.
And I'm just going to say last, I would hope that in future tax reductions and tax policy decisions that our legislature and governor would look at ways that we can use tax policy to generate smart growth in this state, along with other kinds of policies that would create economic development zones and not create sprawling neighborhoods and sprawling towns around North Carolina. I just don't want to be another place where you have to stay in traffic for 3 hours to get home.
Amen
Sprawl,
to that.
sprawl is freedom.
Oh, God.
I am for it.
Going back to freedom again, our libertarian speaks out. Well, thank you for watching the Afterspin. More video all during the week on ncspin.com.